Hello everyone, we're back with another video. As of my total wealth for the end of October, for anyone particularly observant, you might notice that it's actually gone backwards month on month. It's not the disaster it might look like, but still we're going to walk through it and see how we're doing. Let's do it. Alright, so quite excitingly we can now have a rolling year / 4 quarters, so that's pretty cool. Honestly, I'm pretty happy with October. It more or less is average, but I was expecting October to be worse just because we had a few like bills to pay, quarterly bills, etc. Primarily because of a couple of good casino visits. I ended the month up 1.4k. That's my profit. Bought in 2.2, of which 800 was capital. So over 1.4k extra from a couple of casino visits, which is the second month in a row that I've been able to say that. So that's awesome. In terms of where this went, I basically put 800 extra into the ISA. So originally I was just looking at doing 1.7k into the ISA for October. Instead, was able to do 2.5, and was able to do an extra 500 into premium bonds, with the plan being to start adding 500 regularly into premium bonds. Was actually able to do 1,000 in October, so that felt really good. The only problem here was that I didn't contribute to my daughter's ISA, and that's mainly because it's in the middle of two brokerages at the moment. So that was the reason for that zero there. But broadly speaking, I'm pretty happy with October there. Most of it is fairly normal with those couple of changes there. And most importantly, we remain on track, which is it's been a challenging year at times. So actually the bit that I can control, which is the contribution toward wealth, is the most important thing. And we remain on track, and actually a slight increase month on month, just because again we added a bit more than expected, so we continue to have a reasonable cushion before we get to the end of the year. So overall, I'm super happy with this table, to be honest with you. 70k was the target. I think it's quite ambitious. It's more than 30% of our income, and that's our pre-tax income. But again, some of these things like pension contributions, etc., are also pre-tax income, so it's a little bit of a mix. And yeah, I'm really happy with that kind of saving percentages. It's going to put us in great position in the future. So what more can I say? Happy, and let's see the rest of it. All right, so this is where it starts going a little bit more off the rails, shall we say. I now no longer have any real confidence that I'm going to hit my 500k target by the end of March. I think that is unrealistic. Again, we're significantly exposed to both the stock market primarily as well as the housing market. And therefore, if the markets are rough, it means that our investments aren't going to achieve the kind of 8% long term that I've projected them to achieve. Within that, I mean, you can see here quite significant falls. Like if I look at mine and my wife's nutmeg, for example, I mean, those are basically consolidated previous pensions where we don't add any additional capital, and therefore you can sort of see across the last 3 months pretty significant falls in that. Similarly with our ISAs as well, that's a bit more mixed. I've been adding quite significantly into my ISA, not so for my wife's, but again, you can sort of see there on my wife's ISA down sort of 5k. Mine is technically up sort of 3.5k, but again, I've added significant capital into that over that time period. So it's all challenging, shall we say, at the moment in terms of that. Now, in fairness, it has rebounded, right? This won't include the end of last week when the stock market was particularly friendly. So I am now back above 4. But to be honest with you, I've hovered around 4 for like the last 4 months. So it's difficult going at the moment. Again, we're just trying to sort of focus on the important stuff, which is adding to the stock market and trusting the process in the long term. So a bit more mixed here. I'm a bit sad that I'm not going to hit my second target on the road to 5 million, but we will again make a note of it when we do cross that line. And hopefully in the long term, we'll catch up, again, assuming that we can hit our 8% year-on-year average. So this is how we're currently doing at the moment. So a bit more of a mixed picture, sadly, but again, we are having to deal with the market as it is. All right, so in terms of the breakdown, again, I did tweak these last month. I do think they still need a bit more of a tweak, but we'll leave it as is for now, and I'll probably retweak these for the next year, so in a couple of months' time. As mentioned, I expect to miss March. We're averaging about 6k a month on average at the moment, so I only expect to add about 30k by the end of March. There is, in fairness, an opportunity for bonuses. My wife especially gets her Christmas bonus in, I think it's December actually, but if not, then it's January. Mine doesn't come until April, so mine's off, so mine won't be within that window, but still, I mean, she's not going to get sort of a 60k bonus, unfortunately. That would be lovely. But it won't be anything near that, so that's not going to bridge the gap, unfortunately. And really, the long-term goals actually went backwards. so wealth reduced slightly compared to the previous month. And also, you can kind of see in the middle there on the right the earn 3K in dividend income in a single year. So that's our rolling 12-month period. And frustratingly, I missed it by 50p, which just sort of, that's what that 0.2% is basically. That's 50p. So that was pure fluke. When I added it up, I had to share it with Discord because it was like, damn it. Even that target is pretty close now, but didn't quite cross the threshold there. So all the percentages here, etc., have been updated. And again, we're just trying to continue ourselves motivating. It would have been lovely to have turned that the darker shade of green or the complete flag, but we're not quite there yet. So we're moving on, and then yeah, let's see what else is next. All right, so kind of as mentioned before, but this time specifically on the shares. So we were able to add 2.5k in October. Again, better than the 1.7k that we'd originally planned, helped by poker and also blackjack as well. So just to mention there. As before, I left the withdrawals in here just to sort of help everything balance, etc. So historical sort of everything, sort of the first sort of 3 lines are linked to when I was first dealing with trading 212. I was moving money between accounts and didn't really realize the impact that was having, unfortunately. No longer do that, but that's stuck in history. And then since 2023 here, I basically sold down my general investment account, so the stuff outside of my ISAs. I did this for 2 reasons. First of all, I wanted to get away from the kind of reduction in dividend tax thresholds that the government throttled or reduced. And secondly, it was basically just to make sure I hit my ISA targets for that year, and then I've continued to sort of rebalance. So now the only position I have in my general investment account, so outside of my ISAs, is my position in Games Workshop, and I don't want to sell that down. I'm happy to keep it. It's sort of only 3.5k, and it's nice to have it there. So I don't expect any significant withdrawals in the future, and it'll basically just be sort of dividends actually from Games Workshop, which is what the 72.50 was there in September. Anything else to add there? No, honestly, I don't think there is anything else to add there. So let's have a look at our dividends specifically over last month. All right, so honestly, one of my best months. This kind of feeds into the previous month really, where September was less good than it would typically have been, and that's really just because Phoenix last year in 2022 was paid in September. This year was paid in October, and you can see there that Phoenix was by far the biggest contributor to the overall dividends this month. So that was basically the reason there. We continue to track our percentages. I think for me it's going to be especially interesting when we have 2022 all rolled up, so we can sort of see the percentages by year. I think that would be really interesting to see, but for now we are continuing to track the overall percentage of contributions. As a reminder, I have changed my approach since I started. Originally I was targeting a dividend of 4%. That was because I think I was sort of more used to the way the UK market works, and probably a bit more defensive in terms of my mindset, frankly. However, over the last couple of years, I've basically stopped caring about dividends specifically, although again, I would just caveat that by saying I do love receiving dividends. And it is sort of a bit of a proxy in terms of my overall ISA size. So yeah, it's not like I don't care entirely. It is always exciting to get dividends, especially if they give you a chance to average down. That's fun as well. But broadly speaking, now I'm much more interested in the overall return rather than specific dividends. So change in approach there. So yeah, nothing else to add there. And again, just as a reminder for anyone's new, we had some cash savings from when my wife went on maternity leave because we weren't sure that she was going to go back to work. So when she did, we basically went pretty big, pretty early, which you would have seen previously as well in terms of the capital contributions there. So that's why the initial 2021 there is still quite a big number, considering it was our first year receiving dividends. And then just to whiz through this very quickly, seeing as we're doing quite well in terms of time. My transfer in terms of my daughter's ISA is still ongoing. That has been more of a saga than I was expecting. Hopefully it will be complete by the time we do another video. I have made some progress on this and actually did speak to both my wife and her employer. Again, my wife works in private equity now, so we're quite restricted in terms of what we can invest in. This is the Enterprise Investment Scheme and the Venture Capital Trusts. So I wanted to kind of understand what we are and are not allowed to do. My wife's actually, since she started working in private equity, has got a lot more kind of in favor of risk. So when I spoke to her about this, she was actually pretty keen to do it in the future when things allow. And yeah, her employer basically said that we can't pick specific investments, but if we find a scheme basically or a fund that sort of pools investments, it works in a very similar way to any other ETF or fund, and therefore that would be completely acceptable. So I've left this as outstanding just because I've sort of put my name down in terms of like on lists, etc., for when funds get set up, and I think I'll probably leave it in the status for a couple of months until we're hopefully able to get on one. We were considering actually using my wife's bonus to kind of get us up and running into one. Nothing huge to start with, but still sort of like low to mid four figures, so also not sort of a trivial amount of money we wouldn't care about. So we'll keep you updated on that as and when we progress, but for now that's the update there. And in this one, I added it last month. I haven't made any progress on it at all, just because, well, honestly, I've been trying to get my daughter's junior ISA fixed and sorted in the first instance, and then life has just gotten in the way for the other stuff. So as a reminder to myself, we have made some progress in other areas across the year, so it hasn't been completely unproductive year. But honestly, that's an 11-minute video, which for me feels like basically as short as it gets. If there's any questions, etc., feel free to comment. You know the drill, etc. Otherwise, thank you very much, everyone. I've been the Boss Hog, and good luck with your wealth building. Bye for now.